In today's video, I want to look at the dollar and the currencies. We've been listening to the perma bulls call for much higher dollar for years now. Martin Armstrong, especially, seems to be convinced that he's got the currencies completely figured out. And keep in mind that I've said this many times in the past that the currencies are the most heavily manipulated markets on the planet, so there really isn't true price discovery in the currencies anymore. They're just central bank interventions. But anyway, the dollar is due for a move down into its 3-year cycle low, which is going to be due sometime next year. That should include intermediate cycles that start to left translate and fail. So while the perma bulls, again, Martin Armstrong is a big proponent of this. We're telling us that the dollar was going to rally, as the market um, crash proceeded. The dollar was the safe haven, and money would flow into the dollar. And of course, the exact opposite has happened. The dollar has collapsed, and I even said at the time this was a failed um, intermediate cycle in progress, and the ECB managed to turn the euro back down and stop this left translated intermediate cycle, and they created this you know, complete mirage in the dollar. The market's never gonna rally like this. And remember, this was before the market started to crash. So the market was rallying before the crash, and as soon as the crash really got underway, then the dollar collapsed. The exact opposite of what the dollar bulls were telling us was going to happen. But anyway, this evening, the dollar has completed a failed intermediate cycle. You can see it's moved below this low right here. Now, certainly the ECB will try again to turn this back around, but at this point, we've got all the markers are in place for the dollar having completed its 3-year cycle top. And let me widen this chart a bit. All right, so this was our last 3-year cycle low. This was probably the natural rally out of the 3-year cycle low. And then at that point, I think we started to get significant interventions in the currency markets. The ECB was trying to keep the euro suppressed against the dollar. And so we get this, long extended rally that probably has nothing to do with true price discovery. The dollar tried to roll over right here. Again, as I said, this was a left translated intermediate cycle in progress. The ECB stopped the rally in the euro and pushed the dollar back up again, managed to make one more marginally higher high, and now it has come down and it has broken this pattern of higher intermediate lows. So you can see each one of these lows came in at a little bit higher level than the one preceding it, except this one here, but then they managed to abort this intermediate cycle quickly and produce one more higher high, and now the dollar has again broken below that. So the markers are now in that the dollar, this 3-year cycle, this whole monstrosity here that's been created by central bank interventions has probably come to an end, and now the dollar will start to move down into the next 3-year cycle low, which again, like I said, is going to be due. They tend to run about 3 years to 3.5 years normally, although they can stretch sometimes. So if we assume a normal duration, then the normal duration for the next 3-year cycle low in the dollar would be the spring or summer of 2021. And as I've pointed out before, the government interventions in markets usually, eventually they always break, and it ends up producing a much more severe and aggressive move than would have happened naturally. We got a front row seat to that in the stock market recently. Um, the Fed pumped the market up, stretched the intermediate cycle much further than it would have gone naturally, and I kept warning people that was going to cause a major crash, and of course that is exactly what happened in the stock market. So the same thing has been going on here. The ECB has artificially suppressed the euro and kept the dollar propped up much longer than would have happened naturally. So um, we really should see an extremely violent and aggressive move now down into the next 3-year cycle low, and I would say it should probably break below the 2018 low. And this, of course, should drive gold higher. Granted, the bullion banks are going to continue to fight to keep gold suppressed, but I really don't know how they're going to accomplish that. It's going to be very difficult to accomplish that if the dollar is now in the declining phase of its 3-year cycle and producing um, lower lows and lower highs. So this should be the setup for gold to, at least retest its all-time highs between now and the spring or summer of 2021 as the dollar moves down into that major 3-year cycle low.